Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 103 of today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1908, and in 1909 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. We're adding a new feature on episode 103, and in addition to our overview of 5 key weekly economic indicators, once a month we'll be offering commentary on 10 key leading indicators that do a nice job of pointing to future economic conditions in the electrical market. We'll continue to publish that data in each episode on initial unemployment claims, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. But along with these indicators, we will also be continuing to offer regular insight into new construction projects and highlight the electrical sales forecast and local economic data that we publish in electrical wholesaling and electrical marketing. In the week ending August 31st, the advanced figure for seasonally adjusted initial unemployment claims was 227,000. That is a decrease of 5,000 from the previous week's revised level. The 4-week moving average was 230,000 claims. That is a decrease of 1,750 from the previous week's revised level. The U.S. unemployment rate dropped to 4.2% in August. Initial unemployment claims showed some sizable drops in Texas and New York, which had declines of 1,494 claims and 1,112 claims, respectively. The other states with the largest decreases were North Dakota, down 904 claims, Georgia, down 819 claims, New Jersey, down 798 claims, Indiana down 786 claims to 3,094, Michigan down 516 claims to 5,762, California down 473 claims to 38,437, Florida down 470 claims, and Maryland down 377 claims. Only one state had an increase in claims of more than 1,000. That was Massachusetts, which saw its unemployment claims increase by 2,168 to 7,951. Other states in the top 10 for claims increases were Wisconsin, 816 claims, Pennsylvania, 700 claims, Ohio, 659 claims, and other states with relatively minor amounts of claim increases were Washington, also these are all under 500 claims, Connecticut, Oregon, Arkansas, Rhode Island, Kansas, and Illinois. An interesting leading economic indicator for the overall U.S. economy is freight rail traffic because it's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, which publishes this data weekly at www.aar.org. For the most recent week, total U.S. weekly rail traffic was 560,632 carloads and intermodal. That's up 8.4% compared with this same week last year. Total combined U.S. rail traffic for the first 35 weeks of 2024 was 16,652,206 carloads and intermodal units. That is an increase year-to-date of 3.1% compared to this week last year. Petroleum and petroleum products had the largest increases compared to this time last year, with a 10.7% boost in freight traffic, followed by grain at 9.2% year over year. Total intermodal units also had a fairly large increase at 9.3%. Coal was down the most with a 15.4% decline, and non-metallic minerals were down 7.2%. If you track the oil market, you're probably familiar with the Baker Hughes rig count. This tracks oil and gas rigs that are operating. The data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It really gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma and parts of New Mexico, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. There was another slight decline for the Baker Hughes rig count in the most recent data. The U.S. total number of operating oil and gas rigs was down 2 rigs to 583. That's down 48 rigs from this time last year, and that's a 7.6% decline. On a statewide basis, Texas saw the most slippage with a 10.5% decline to 274 rigs. 14 of those rigs in Texas and that decline were in the Permian Basin, which is the largest in the country. That Permian Basin also covers parts of New Mexico. That basin is down 4.4% year over year through this time last year. The current price of West Texas Intermediate crude oil, or WTI, as of September the 9th is $67.82 per barrel. It's been on decline over the past 2 months, and after topping $85 per barrel in March and bouncing around in the $70 per barrel range in the second quarter, year to date its number went negative when it dropped into the low 70s and then into the $60 per barrel. The next slide will show you where WTI prices have been in the past 5 years, and I think it's an interesting comparison. While the geopolitical scene in the oil market has been pretty dicey all year with the war in Ukraine, tensions in the Middle East, oil prices really started attracting attention when they dropped below $70 per barrel recently. While WTI in the 60 per barrel is far from catastrophic, it had maintained a floor of $70 per barrel for most of the year. So energy economists are watching for any further signal of decline that it could be slowing, because it could signal a decline in demand for oil and possibly a slow of economic conditions. The 5-year average is $70.47 per barrel, which gives you an idea why that $70 floor is such an important indicator. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future activity since copper is used in so many industries. With the construction industry is one of the largest markets for it because of its use in wire and cable and copper plumbing pipe. The current price for copper as of September the 9th is about $4.15 per pound. Copper hasn't been below $4 per pound since March, and the recent mild decline will be watched closely by copperheads to see if it drops any further. The long-term expectations for copper continue to be quite bullish because of the electrification picture with the rise in demand for the copper to feed the U.S. power grid, data centers, and EV batteries. However, the current cyclical softness continues. I know that I throw a lot of economic data at you in these podcasts, and I am always looking for new ways to present the data in an interesting and easy digestible manner. I think I may have hit on something, and I think it meshes nicely with all the weekly data that we present in each podcast. I've selected 11 leading economic indicators that will help us measure the direction of the electrical market. NEMA's Electrical Business Forecast, published monthly by the National Electrical Manufacturers Association, Electrical Manufacturers New Orders, published by the U.S. Census Bureau, Electrical Contract and Industrial Employment on a national basis, also published by the Census Bureau, the Consensus Construction Forecast, published by the American Institute of Architects, the Dodge Momentum Index, published monthly by Dodge Data and Analytics, the Census Department's Value of New Construction put in place, Single-Family Building Permits, also published by the Census Department, the Housing Index, published by the National Association of Home Builders and Wells Fargo, and S&P Global's U.S. Manufacturing Purchasing Managers Index, and the quarterly survey that EW does along with Vertical Research Partners on distributors' views of economic conditions in the electrical market. Let's take a look at these indicators. Let's take a look at the first 5 indicators, and they were fairly mixed, with maybe a strong or perhaps even slight lean to the positive. First one we can take a look at is NEMA's Electrical Business Conditions Index, and it's published by, as we mentioned before, National Electrical Manufacturers Association. It's a survey of electrical manufacturers. The July reading showed steady growth, and that's why I gave it a yellow symbol there. It's at 57.7 points. If anything over 50 is considered good. The Futures Conditions Index is actually surprisingly positive at 88.5%, and again, 50 points indicates growth. Looking down at the electrical manufacturers' new orders published by the Census Bureau, short-term outlook looks good. Long-term, maybe slightly down. In June, $4,505 million in new orders is up a fraction of a percent over May, but that number is down 1.3% over June. Electrical contractor employment, published by the U.S. Census Bureau, looking decent in both cases for the long and short-term market. In July, the preliminary U.S. total data was 1.2.4 million. That's up 1.1% over June, up 4% over July 2023. Industrial employment was the only one of our indicators that showed declines, and although they happen to be very small, published by the Census Bureau. Very small decline in the current year-over-year data. August preliminary data in U.S. industrial employment shows some minor slippage to 12,908,000, and that is down 0.2% from July and 0.1% from August 2023. And the American Institute of Architects construction forecast, and we refer to this one quite a bit. It's really pretty cool to look at. It's at AAI.org, and you can right now it's predicting for 2024 non-residential construction to grow 7.4% this year, but slow to a more moderate pace in 2025, about 2%. Again, both will be in positive. It just slipped. It is down a little bit for the next year, down about 5 points actually, but it's in the positive, and I still want to put it in that ballpark there. Our other indicators are also looking bullish. Nothing crazy bullish, but definitely, solid and steady. And slow and steady often wins the race, as they say. The Dodge Momentum Index, or DMI, in July was up 7.9% over June. It's up 17% over July 2023. Dodge says that this indicator leads construction spending for non-residential buildings by a full year. So this is really a real leading indicator. The value of new construction placed in the Census Department. This is monthly data. Maybe not as much of a leading indicator in the truest sense of the word, but when the spending is released, it does mean future activity. So I think it is still a very good indicator to watch. It is one that we publish the monthly data on a very specific basis in Electrical Marketing newsletter. That newsletter is available for as $99 subscription rate. The construction spending for July 2024, $2,162.7 billion, slightly below the June estimate. That July figure is up pretty nicely over last July and is up 6.7%. Single-family building permits, also published by Census, we saw a slight rise in July permits, down a little bit for year over year compared to July 2023. Building permit, obviously, it's a leading indicator because they are home builders pull these permits before they start building a house. So when they pull a permit, they're spending some money on those permits. So you know that they're definitely going to be breaking ground on those, and that's just going to lead the activity, could be by as much as a couple of months. Also, in the residential market, we have the NAHB Wells Fargo Housing Index that's published by the National Association of Home Builders, sponsored by Wells Fargo. Their index in August fell by 2 points to 39 points in its preliminary number. It's 11 points below last year. It's another one of those indexes when that says 50 point or more means it's an optimistic reading. So you can see that overall in the housing industry, not too bullish for all the reasons that we know so well, with the interest rates still relatively high, home sales kind of slow, and there's not as much activity as home builders would like. Looking at more toward the purchasing managers index, as published by S&P Global on the manufacturing side, actually looking fairly decent. It's slightly over the 50% mark there. It's up to 51.6 points in June. It's up 5.3% year over year. That index is kind of interesting how they put it together. They survey 800 industrial purchasing managers. They combine their outlook on new orders, output, their employment, since suppliers' delivery time, and the stocks of the purchases of what stuff they have on the shelves there. I also wanted to highlight the survey that we've been doing every quarter for the last 4 or 5 years with Vertical Research Partners, where we survey distributors what they see for the current quarter and the future quarter. And right now, in our most recent one for the third quarter, the survey respondents see an increase of 4.2% in sales. That wraps up our podcast for today. Again, a special thanks to the folks from Champion Fiberglass for sponsoring this series over the past 4 or 5 years. We do appreciate that, and it always kind of blows my mind that we're over 100 episodes. It's been a lot of fun putting these together, and I hope we can do a couple hundred more. Please contact me if there's any other type of economic data you'd like us to present in this podcast. I hope you enjoyed the new leading economic indicator, the format that we're putting out here. I think it's going to be an interesting way to get out and get a lot of information that's pretty digestible and hopefully pretty easily to understand format. Our next presentation will be on September the 23rd. Hard to believe we're already getting into the fall so quickly here. So until then, be healthy, be happy. Look forward to talking with you in 2 weeks.